Hello and welcome to the Weekend Investing Daily Byte of 13th of August and a bit of softness in the market a day after the Hindenburg situation that arose in the markets yesterday. Yesterday, the market has recovered fully, but today gave up some of that ground and are looking a bit soft ahead of the Independence Day break also this week. The markets, while it opened pretty much at flat ground, it moved down not only in large caps but in mid caps, in small caps. The entire market seems to have gone into a uh, you can say a slow grind mode. No major moves in any sector as such, but just a very profit taking kind of a situation that is coming. So the development in the market right now is that MSCI index is getting rejigged ahead of us. Some stocks have moved. We'll discuss some of the stocks, what's coming in, what's going out, and how such rejigs impact the market. But please first subscribe to the channel if you haven't so far. So as I mentioned, gradual slip. We've given up that average that we were sticking along. There was a wedge that had formed that also got broken, a flag-like formation. It may so happen that we may now go towards either the bottom of this first candle here, and if that gets broken, towards the election day high, which are important support points. So around 23,300 is post potential trigger post this flag break. It may so happen that in the next session it may get nullified, but as of now, it seems like we are headed lower and the market is slightly coming off, minus 0.85% on the Nifty. Nifty Junior also coming back exactly from that average after having bounced into it, minus 1.14%. Again, the key level here will be, this around 71,000, below which, of course, it starts to get weaker, minus 1.1% there. Mid caps also significant intraday play today, the wider candle towards the lower end, minus 0.77% down on mid caps. Again, coming off towards the support of 20,500. And small caps had a almost a bearish engulfing candle at minus 1.12, minus 1.23% downward move on small caps. So the underlying current seems to have ebbed today. There is definitely a feeling of uh, some kind of lethargic activity in the market. Maybe the FI sell was a big number today. We will come to know by evening. We don't know that yet, but the buoyancy of the market certainly was missing today. Bank Nifty has also broken down from the wedge. It is almost at the recent lows, below which, of course, further downside will open up for Bank Nifty. So Bank Nifty is the sort of segment that is leading the market down, minus 1.48%, and this on a day when inflation was announced to be much lower than expected, which would have meant that a interest rate cut could be in the offing in the near future. Today's heat map, there was virtually no green. Titan managed 1.89% up, but HDFC Bank leading the markets down, minus 3.43%, and this is linked to the rejig that I was mentioning. BPCL also down 3.5%, ONGC down 1.5%. Some of these were big cuts on large cap names, along with State Bank at minus 1.85%. LIC down minus 4%, DLF, PFC, REC all down, Canara Bank, Chola Finance, Dabur, IOC, Zydus Life, despite great results, again a play on the rejig. Motherson also down 3.99% after beating the results. So it seems that most stocks have run up beyond the expected results also, and that's why even on good results, stocks are not sticking to their position. So a weakness all through the market, sectorally also, uh, is not wildly down, but very consistently across sectors, zero point 0.6 to 1.6% down. Only IT, pharma, FMCG, the defensives were the least hit, but metals, PSU banks, public sector enterprise stocks, private banks, all were down significantly more than 1%. PSU Bank's chart looks probably the worst of most sectors, where it not only did not cross the election day high, but is now veering towards election day lows. It has already broken down from the recent lows. So certainly this looks like a very distributive kind of a chart, and it will be difficult for it to really turn around and go up very, very rapidly. Triveni Turbine was one stock that really bucked the trend today, up 12.33%. There was talk about a lot of ethanol blending um, by 2025, 2026. Several stocks in that space were doing really well. Triveni Turbine also up almost 32% for the previous month gone by. So it has done a remarkable job in the last few years, but a quite a uh, great bounce on a weekday for that stock. MSCI Rejig ahead, what is moving, what is to be expected. So these are some of the expected actions from MSCI. This is sourced from Twitter. Many of these posts were there, one from Somit Sarkar and other from ET and CNBC, that these stocks are likely to be included in the inclusion by end of August. So Dixon, Vodafone Idea, Oil India, Zydus Life, RVNL, Prestige, Oracle Finance, and these are the kind of flows these stock will have. HDFC Bank is likely to see a weight up with a flow of $1.8 billion. Bharti Airtel, Coal India. Exclusion, totally to be excluded from MSCI is Bandhan Bank. This much outflow will happen. And our Reliance, Maruti, Infosys, and LTI Mentary will see some weight down, so outflows will happen. So already this is prospective. This is potentially happening. And the markets adjust accordingly as we come closer and closer to the date. So some of these stocks, the ones that are included, Dixon, Zydus, RVNL, Prestige, you have seen what the kind of moves that they've had. Dixon has had a tremendous move this year from nearly 6,000 to almost 12,000. Oil India has had a fantastic move, and even today it was a up and a up day. It has gone from nearly 200 to 608 rupees. Zydus also, despite the huge run up, of course, in the last two sessions has fallen off. Maybe it was expecting a much higher inclusion percentage. That's why it has fallen off, but it has gone from 680 to almost 1200 rupees. RVNL, of course, has been riding up in the last many months in a big way. And yesterday it was a huge candle up despite poor results very, very recently. Prestige also has been going up, although in the last month and a half, it has corrected to some extent. Today it was in green on this news also. OFSS also has been going up quite dramatically, and in the last 4 or 5 sessions, and today's despite weak markets again has gone up. So you are seeing that those that are getting included are already getting the flows. People are readjusting their portfolios accordingly, and so on and so forth. And Bandhan Bank from the very start of 2024 has been down. There was a small jump here, but in the last many sessions it is coming off very, very rapidly, of course, because a lot of folks will be selling it off before the MSCI actually takes it out of the index. So even HDFC Bank, the weightage is going up, but it is going to go up in two tranches. So what has happened is that a uh, market was expecting that the entire chunk will come in one go, but it may so happen that it may come in two sessions in August and November, and that is possibly the reason why HDFC tanked so hard, because people have already built positions in expectation of this happening. So the point that I'm trying to make is that whatever we come to know about these announcements is only for our retail consumption. The big boys of the club already know this is happening for a long period of time, and when these news are released to the retail or the media, it is potentially already positions have been built, and some people will have a disappointment on the release, and some people we may have some advantage due to that. HDFC Bank versus Nifty, of course, has been extremely poor in this last few years, and there was a lot of expectation built around more flows, but again, that has also been dashed. MSCI India versus MSCI Emerging Markets is a very, very interesting chart, where from 2018 till about mid of 2021, both were together, MSCI India and MSCI Emerging Markets, but MSCI India then took off on a completely different trajectory, while the emerging markets fund, MSCI Emerging Market Fund, has just been flat, primarily because China is also a big weight. So India's weight in the emerging market funds has also gone up from single digit pre-COVID to higher double digits now, and that is also causing a good flows towards India component of the emerging market fund. So can HDFC Bank deliver from here? Is the question. Can these MSCI Rejig stocks Can they sustain further now, or is the move already done? We really don't know. We have to follow trends and see where they go. HDFC Bank, of course, has been a disappointment for a lot of people who had built positions, but I think it may be an opportunity for those who are long-term lovers of HDFC Bank. Let me know your thoughts on this. Thank you so much for watching, and I'll see you in the next one. Bye.